Hello everyone and welcome to our webinar with the title Overview of Asian Solar PV Market and Financing Opportunities. This webinar is organized in preparation to the Unlocking Solar Capital Asia Conference, which is planned to take place 28th and 29th of September in Singapore. So thank you all for joining us from your busy schedules. My name is Shushan Khachatrian and I'm the project manager of the conference that I mentioned in Solarplaza, and I will be chairing this webinar with you and with our speakers. So, first, briefly about our agenda. So yes, as I started with a brief introduction, it will be followed by two presentations by our experts. First presentation will be a dive into the dynamic and evolving solar PV market in Asia, a general overview, and the second presentation will be about tracking country investment attractiveness for solar energy and strategies to create bankable PV projects in Asia. The last 10 minutes will be dedicated to questions and answers, and I will get back to that. So the webinar is planned to be finished in 1 hour. So before I start, some practical notes. You can ask questions during the whole time of the webinar in the chat box at the right-hand side of you. As I mentioned, we have a dedicated time for questions and answers at the end, and we will make sure to address your questions to the speaker. So I encourage you to ask questions. If you are facing any technical questions or issues, also feel free to use the chat box. My colleagues will try to help solving your problem. And the last note, the presentation slides, as well as the whole webinar recording, will be available after the webinar and will be sent to your emails. So before we start, just for those of you that don't know us, they don't know about Solarplaza, I would like to briefly present. Solarplaza is a knowledge platform of over 50,000 PV professionals, and our goal is to accelerate the energy transition. Our main business is organizing high-level conferences and trade missions, and in the past 10 years we have organized over 80 events in more than 25 countries, both in Europe, US, and the emerging markets. I would like to show the track record of the Unlocking Solar Capital events. As I mentioned, we have been organizing already 85 plus events in over 25 countries, and the Unlocking Solar Capital Conference series aim to help closing the financing gap in the emerging markets and creating bankable projects. So this was the aim of this event series. It started in 2016 with partnership with the FMO, the Dutch Development Bank, where we jointly organized a conference called Making Solar Bankable in Amsterdam, and this was regarding all emerging markets. After the big success of this conference, we decided to organize similar conferences in each region to make it more region-specific. So it started last year with Africa, followed by Latin America in almost a month, and finally we are going to Asia in September. So this will be the first edition in Asia. Other than the Unlocking Solar Capital events, we have organized a lot of trade missions in Asia, so we have good network and connections in those markets like Japan, China, India, Thailand, Indonesia, and Vietnam. So since I also mentioned, yes, please already save the date of Unlocking Solar Capital Asia, 28-29 September in Singapore. This is a place to learn from experts in the region and meet the solar PV value chain in Asia, from developers to service providers, investors. We are going to cover all countries from Southeast Asia to Central Asia, and now you will learn also which countries are suggesting best conditions for solar PV development. And a brief overview of our program on what to expect. We will have 2 tracks, on-grid and off-grid track, just to make sure that all the segments get equal attention, and we can discuss bankability issues in all those segments. The detailed agenda will be published to the website in a few days, together with the first speakers. So you can keep an eye on that to see. And if you have any suggestions about the program and agenda, please feel free to reach out to me. Yes, brief selection of participating organizations to expect. Okay, so I would like to present our first speaker, Benjamin Attia. He had a very early morning. He's based in Boston, so Ben, we are very happy that your alarm worked this morning. So Benjamin is GTM Research Global Demand in the Global Demand team, providing market research in emerging economies in Southeast Asia, India, and Sub-Saharan Africa. He has published and presented research on several topics in clean energy, including a novel community-based finance and management framework for rural PV microgrids. Ben, I will now make you a presenter, so please put your presentation in full screen mode, and yes, and the floor is yours.
Great. Okay, can everybody see that?
Yes, Ben, if you could put in a full screen mode. Yes, I think.
Oh, hold on.
Yeah, now it's perfect.
How about that?
This one is a little bit small, but...
Better? Or it's the same?
No, it's the same. I think it's better if you use... okay, this is great. Okay, go ahead.
There we go. Okay. Thanks, everybody. Well, thank you, Shushan. Much appreciated for the opportunity to be able to share some of the work that GTM has been doing in the Asian market. My name is Benjamin Attia. I'm an analyst with the Global Solar Demand team, and I focus on mostly emerging economies in Asia and in other places of the world as well. Just a quick, brief bit of context on GTM Research. We're a global market research firm that has been guiding companies pushing the clean energy transition for over 10 years. We have industry-leading subject matter expertise in the entire solar PV value chain, energy storage, and what we call the grid edge, which covers the evolution of the utility-customer relationship. Our solar research covers the entire value chain of the PV industry, from raw polysilicon through systems-level components, as well as market dynamics, policy, finance, and project-level data. Our analyst team spends all day doing data-rich analysis, talking to key players in the industry, and refining our understanding of global trends that impact risks on the ground. We write regular reports, briefs, and notes to clients on real-time happenings in the industry, and we believe this allows us to have a unique ability to understand and predict trends within the industry. So we're thankful to Solarplaza for the opportunity to share a small piece of what we've been working on with you today. So just for starters, our view on global demand, this is actually just updated. It hasn't even been released to our clients yet, so we're about to do that in a few days here. But this is our updated view of the regional breakdown of global PV demand. So for 2017, we're expecting just about 81 gigawatts to be installed. 65% of that will be installed in Asia. So it's obviously the leading region world. We have East Asia, South Asia, and Southeast Asia comprising a total of 65%. So we expect about 5.3% year-on-year growth from 2016 to 2017, after the massive year that the industry had last year with 54.1% growth over 2015. Next year, we expect slightly more modest growth, about 3.7%. And in a 5-year view, we have a CAGR of about 7%, revised upward from our outlook last quarter due to some utility-scale project spillover in Europe, Southeast Asia, and the Middle East, and some reduced demand expectations in Latin America and in the U.S. So some of the key regions or markets there, obviously China, the U.S., India, and Japan will be the top 4 markets this year. And demand is actually more concentrated in the solar industry than at any time in the last 7 years. However, we do expect that to change very quickly starting in 2018 as emerging markets are driven by tenders, including in Southeast Asia, India, and the Middle East, as well as in West and Sub-Saharan Africa. We do maintain expectations that module oversupply conditions will persist for the next 2 to 3 years due to expected manufacturing capacity growth in excess of downstream demand needs. Component prices will continue to drop, especially in major markets, leaving opportunity for increased competitiveness in technology-agnostic tenders and record low bids. So we're going to switch now to a poll question. Shashan, I think you'll switch here.
Yes, the poll is right now on your screens. So Ben, you want to read out the question and the options?
Sure. So something that I'll be talking about here is that nearly all Asian solar markets are driven by feed-in tariffs rather than competitive procurement. Can FITs in emerging economies support long-term sustainable market growth? So my choices here for you to try to get the entire gamut of responses are that A, yes, FITs provide a predictable and stable incentive. B, yes, but only with long-term political commitment to renewables. C, no, the FIT era is being replaced by competitive procurement and represents necessary but burdensome policy. Or D, no, the policy uncertainty around Asian FITs introduces too much risk. So let me just give a minute or so to collect responses, and then I think, Shashan, you can read those back to me and we can discuss that.
Yes, so let's give for a few more seconds until we get all the results, because right now I am seeing in my screen that the results are changing very quick. So yes, let's give for a few more seconds. So once again, you can see the poll on your screens. Please choose the choice you think is the most probable in this case. And yes, let's wait for a few more seconds and then we can launch. Yes, we can launch the results now. Okay, so we have the results and I will read it out loud. Everybody can see on their screens as well. The participants, so 19% of the responders think yes, feed-in tariffs provide a predictable and stable incentive. 35% thinks yes, but only with long-term political commitment to renewable energy. The majority of the voters, 42%, think no, the feed-in tariff era is being replaced by competitive procurement, and only 3% thinks no, policy uncertainty on Asian feed-in tariff introduces much risk. So yes, the winner is the third option. Is that in line with your expectations, Ben?
Exactly, actually, yes. So I'll use the next couple of slides to demonstrate why I agree with our participants here. So our FITs in some of the Southeast Asian markets as well as some of the other Asian markets sort of have a varying differential relative to retail power prices. So if you look at the Philippines, the FIT is actually lower than all of the categories of retail prices for behind-the-meter solar. In Vietnam, the recently announced Decision 11 actually shows that the FIT was not quite very generous with respect to commercial customers. In Indonesia, the FIT, this is an average because it varies state by state across all of the different islands, but the PLN average tariff for Indonesia is quite generous, but there are significant grid constraints there that kind of prevent some things from happening as well. And in Malaysia, we have a similar situation. But this differential is not uniform, and there's a significant amount of policy uncertainty that we'll be discussing that kind of affects or threatens the efficacy of feed-in tariffs in Asia. So this is something that we like to do at GTM here. On the competitive procurement side, we're just tracking all of the markets that have either discussed or planned tender or competitive reverse auction scheme, and those who have actually released tenders or installed tendered capacity for solar. So as of now, in 2017 alone, we're tracking 29 new countries added to this list since the beginning of the year. So that brings us to a total of 48 national markets where tendering or auction schemes are in place, and 25 national markets where tendering or auction schemes have been discussed or planned. So if you take a look at the Asian region, most of these countries do have tender or reverse auction programs in place. However, this is still an FIT-driven market, and this transition is still beginning. So something that we also do is we do some competitiveness modeling for leading bids globally. So some of the records that have been set recently in Swihan in Abu Dhabi in the United Arab Emirates, and in Mexico in the second auction just a few months ago, as well as the leading bids in India, which are not globally leading, but are leading in many senses in the region, in Rewa and in Badla actually just earlier this week, demonstrate that globally unsubsidized grid parity has arrived or is fast approaching in many of these markets, which calls the efficacy and the long-term sustainability of an FIT into question. In fact, every 1 gigawatt market in 2018 or above, with the exception of the United States, will be purely auction-driven. Tender-driven development will create nearly 1 gigawatt annual markets in Algeria, Iran, Jordan, Morocco, Turkey, Argentina, Chile, Taiwan, Canada, Pakistan, the Philippines, Thailand, Nigeria, and South Korea. So this is something that is proliferating globally, and surprisingly, the Asian markets, which comprise such a significant portion of global demand, are a bit behind the curve with respect to this policy paradigm shift that's happening globally. So what I'd like to do now is just dive into each of these regions, the way that GTM divides them, and then focus on a few key market opportunities with the time that I have. So in East Asia, obviously, of course, this market is dominated by China, followed closely by Japan. But what we are seeing in the long term is that despite China's record installations in 2016, we actually expect that this region will have peaked this year. So the long-term regional growth outlook is actually quite weak. We expect a 7.3% decline in cumulative average growth in demand from 2017 to 2022, although we do still expect over 200 gigawatts to be installed in East Asia in the next 5 years. So we expect Chinese demand to decline gradually and Japanese demand to contract incrementally as a result of some paradigm shifts that I will discuss in a few minutes. But the significantly higher demand than expected in 2016 in China actually did allow us to shift our expectations of the entire global market. We actually originally were expecting a decline this year, and now we're expecting 5.3% growth as a result of the sort of paradigm shift or the NEA policy uncertainty in China. There is going to be a utility scale boom in Australia through 2019, which is driven by the large-scale renewable energy target, although we don't expect this to be long-term sustained growth, but rather a boom for the next 2 to 3 years, and then measured decline by 2020 and on. And there's also some promise in the Taiwanese market with aggressive renewable energy targets and local manufacturing, which will contribute to a robust market. So focusing on China a bit here, we've actually just been working on a very interesting piece on the demand drivers in China. So in 2016, 72% of installed capacity was driven by the 5-year plan normal quota on utility scale projects. And there was a small allocation for the Top Runner program and then a modest amount of behind-the-meter distributed generation in rooftops and C&I sector. However, because this introduces a lot of policy risk, not just to China, but to the entire global market. The opaqueness of the NEA's policies and FIT cuts created a very cyclical quarterly demand cycle that caused some significant issues for the global supply-demand balance, making it prone to disequilibrium. So we expect a similar pattern this year. FITs will be reduced by 13 to 19% depending on province at the end of next month. But we do expect a DG boom in China this year as the demand drivers diversify and curtailment in the western part of the country forces development to go towards the east, towards population centers. So these are some diversified demand drivers that are actually helping the market have increased transparency on China, which allows the supply-demand balance to remain less in question. So there will be the poverty alleviation program has already allocated or awarded 5.16 gigawatts, and we expect close to 10 gigawatts of DG to be installed in China in 2017. So something that we do at some of our analysis is focused on different demand scenarios. So we have 2 different potential scenarios for Chinese PV demand through 2022. Both of these assume a shift to smaller scale installations and increased competitive auctions for utility scale capacity over time. But we have 2 different views here that we'd like to present. One is that Chinese demand remains FIT driven and tapers gradually as FITs are cut further and slowly replaced with competitive auctions. The current 8 to 9% gross margins for developers thin out, Chinese players begin to seek juicier returns in other markets. Demand remains globally leading, but it's declining from levels in 2016 and shifts rapidly towards DG projects, top runner projects, poverty alleviation program projects, and demand starts to stabilize in 2021 and 2022 as coal retirements begin to happen much more quickly. So this is similar to our base case scenario, trending towards our upside scenario. The other option is that we also have 30 gigawatts plus of demand in 2017, but instead of an FIT cut in June 30th, 2018, the NEA instead decides to scrap the FIT entirely and shift to competitive reverse auction, centrally controlled program. So we've spoken to some people who say this is on the table for discussion, and this scenario has a relatively high implementation likelihood as the NEA may see tenders as a way to cap demand, limit curtailment, and start to deal with some of the long-standing FIT back payment issues from the China Renewable Energy Fund. It's also likely that the FIT and the tendering scheme would not coexist for too long. So if this begins to play out, that we may see a very large interconnection approval rush at the end of this year in Q4, and then a similarly scaled installation rush at Q2 2018 for the last FIT deadline. So these auction volumes would be informed by the 5-year plan, which would actually reduce annual demand by a significant degree. So this would drive demand to DG customers and poverty alleviation and top runner programs, and then a small portion of that would belong to the normal quota design. So some of this unpredictability and lumpy demand in China could create some module price cliffs the second half of this year. So some of this future policy uncertainty will add some significant risk to forward module pricing assumptions for razor-thin bids all over the world, which may help stabilize tariffs and competitive auctions in the second half of this year and into next year. So on Japan, I'll try to move a little bit quicker here, but we're seeing a very significant policy shift here as well that's actually going to cap the market in a similar way to what may happen in China. So the FITs are being phased out slowly. Over half of the 50 gigawatt FIT approved pipeline is going to be canceled, something in the range of 27 to 28 gigawatts it seems. The first auction is actually going to start happening in Q3 this year, and there's a ceiling price of 21 yen per kilowatt hour. But all of this is actually designed to restrict growth in Japan, and it's something that we've seen coming for a long time. Similar to the German market, it's a post-mature market that was built on a lucrative and overly generous FIT payment that was introduced in 2012. The market boomed in 2013 and 2014 and 2015, but it's more intention than this might look. It's likely, we suspect that METI is using this tendering scheme as a way to cap and control solar installation demand because of these market saturation issues and the liberalization and deregulation of the Japanese electricity market. So because of some of these land and labor constraints that are present, this will limit the potential of development for 5 megawatt projects and greater. So this is just a quick slide to demonstrate how the FITs are declining as PV penetration increases, and this is largely driven in the future by both residential, commercial, and industrial segments, much more than utility scale for the reasons I just listed. So in South Asia, this is of course a market driven by India. We expect the market to just about double this year in 2017 from last year. And this region has some of the lowest globally leading module prices, which is actually leading to some very aggressive bids in the Indian market at Rewa and Badla, like I mentioned. And this is actually leading to some margin squeezing and some financial risks for some of these developers. Elsewhere in the region, Pakistan has about 2.4, 2.5 gigawatt pipeline and will be tendering through NEPRA later this year. And Bangladesh also has about a 300 to 400 megawatt pipeline of committed approved projects. So in India, we've recently seen the SECI and MNRE double the solar parks target to 40 gigawatts among some of these infrastructure delays. So this is just a breakdown of the solar park approved capacity by state. But something that we've seen is that there's a very clear economic advantage to these solar parks, in which 30% of this initial cost assistance and preferential land and permitting agreements is seeking to provide some rate-within bids and kind of draw some more attention and interest to the sector. This new scheme is going to oversee the establishment of 50 additional solar parks and at least ultra-mega solar park projects of at least 500 megawatts by 2019. 34 parks with 20 gigawatts of total capacity were approved before, and this was doubled, like I said, to 40 gigawatts. So this has led to a little bit of questioning, because there are some infrastructure issues, including roads, fencing, security, telecom, high voltage transmission infrastructure, monitoring, that have actually been falling behind the pace of development of the projects themselves, which has delayed construction timelines by 6 to 8 months in order to wait for these promised infrastructures to catch up to the construction of the project. So the Asian Development Bank has recently proposed financing in order to help alleviate some of these issues. But we still do expect a tender and auction pipeline in India to exceed 30 gigawatts by the end of Q2, by the end of this quarter, but there still may be some delays because of this infrastructure issue. So in Southeast Asia, there's a significant amount of foreign investment. We're seeing some policy uncertainty in Thailand, the Philippines, Malaysia, Indonesia, and Vietnam, actually, which is significantly limiting the region's growth potential. I'll go into this in a little bit more detail in a few minutes. But despite only some massive undersubscription in the self-consumption program in Thailand, we still do expect a promising pipeline. And there's an upcoming agricultural co-op program that's going to tender something up to 500 megawatts. In Malaysia, there's a very recently announced net metering policy and utility scale tenders. And we do expect very high demand in Malaysia, much higher than the 1 gigawatt by 2020 national target. There's a lot of low-cost domestic wafering and module manufacturing, and about a 1,250 megawatt tender, which is the first round of which has been awarded, and the second round, which is upcoming in the next couple of months. But we do expect this market to reach 6.5 gigawatts of annual demand by 2022. So in the Philippines, there's an approved project pipeline of over 4 gigawatts, and this is spread out among 3 key regions: Luzon, Visayas, and Mindanao. And we expect that this pipeline will actually continue to grow despite the cancellation of the round 3 of the FIT, and we do expect that there will be healthy demand in the Philippines despite some of these consistent policy issues. But we do expect also that there may in fact be a tender program introduced by the end of this year, in line with the Malaysia Solar Roadmap 2030, which has been part of the ASEAN conversation. So in Vietnam, we have over 2/3 of the 5 gigawatt pipeline is actually from local developers, so mostly led by EVN, which is the Vietnamese utility, and one of these 2 gigawatt projects, which is going to be announced or has been announced and approved in the Dak Lak region. But there's also a lot of foreign investment as well from South Korea, the United States, and then a few projects from Canadian, Indian, and Chinese investment as well. For reference, this is one of the largest pipelines in one of the emerging markets that we track, the Philippines and Vietnam. But we are concerned about some of the policy uncertainty that could these announced and approved projects. So I'll try to wrap up here so I can hand it back over to Shushan and Rohan. But what we see in Asian markets is that there's enormous opportunity, but there is a good bit of policy uncertainty restricting growth in the market right now. So we do expect 65% of global demand to be comprised of Asian markets this year. We are concerned or see a significant risk from the NEA holding concentrated power over supply-demand equilibrium. But because of these diversifying demand drivers, such as the Top Runner program, the Poverty Alleviation Program, and behind-the-meter DG boom, this will reduce global risk and increase allocation transparency for China and as well as for forward module pricing in the rest of the world. We expect India to overtake Japan to become the 3rd largest market in 2017, and will install close to 9.5 gigawatts. And sort of more broadly here, because Asian demand is still FIT driven, There is a transition to competitive procurement, which is being led by Malaysia, Japan, and Thailand. However, some of these policy uncertainties around Decision 11 in Vietnam and Decree 12/2017 in Indonesia, as well as the cancellation of the Round 3 FITs in the Philippines, are reducing some risk to these multi-gigawatt pipelines. We want these pipelines to become actual contracted pipelines rather than announced or approved, and there's a significant threat for something like 14 to 17 gigawatts of approved capacity because of these policy decisions. So with that, I'll just say thank you. Again, my email address is here. Feel free to reach out if you have any further questions on some of the work that we're doing or any other ways that we can work together on this. Thanks so much. I'll pass it back.
Thank you very much, Ben, for the very detailed presentation and the fresh insights that hasn't been shared yet. Very much appreciated. We got quite some questions, but I will keep it for the last 10 minutes, so that we first give presentation to Rohan. So Rohan Singh, Managing Partner Asia at Fingergreen. He leads the team in Asia and is planning to move to the new office in Singapore shortly. Rohan worked on France-India cross-border deals. He especially realized the fundraising in India for a French player of the renewable energy market. So he's very experienced in investment and financing overview for Asian markets. So I will pass the screen and the floor to Rohan right now. Rohan, please make your presentation full screen, and right now you will receive a request to share your screen.
Perfect. I think, I don't know if you can hear me. Thanks, Shushan and Ben, for your presentation.
Yes, we can hear you, Rohan. Please make your presentation full screen. Yes, perfect. Go ahead.
Perfect. So thanks, Ben, for your summary at the end. I think I will bounce on that, and especially for some uncertainty regarding Vietnam and Indonesia, for instance. First of all, let me just give you a few words on Fingergreen. We are a French-based advisory firm, really focused and dedicated to renewable energy. We are operating throughout in 48 countries. Today, we are mainly advising our clients who are developers, IPPs, and getting affordable, long-term, and viable financing solutions. So we are between the developers and the financing and lenders. So it comes to us, and for me today to discuss this topic on the bankability of a project and how to make it bankable regarding those lenders criteria. And just to add up on Fingergreen, we have, like Shushan said, we have offices in Paris, Rome, in Abidjan for all the sub-Saharan African activities, and soonly in Singapore also to strengthen our footprint in Asia. So India plus Southeast Asia. Which is quite booming, and like Ben said, this is a really promising market. In terms of context, we know that except maybe excluding India, China, and maybe Thailand, the market is really dedicated to small mid-sized projects, so from several kilowatts to mainly 10 to 30 megawatts. Local developers used to have a really strong footprint in their local own countries, but sometimes have a lack of experience in renewable deals, and especially in the financial structuring. So I will try to give some more insights in terms of financial feasibility also. We know that due to these demands and increasing capital requirements, we have to get new additional sources of financing that should inflow the market and the Asian market. On that, we think that providing guidance to project developers to structuring their projects should be a key component and have an effect on the bankability of their projects. this map is just to summarize what Ben said also, and about the attractiveness of solar PV sources and power in Asia largely. We know that across the different countries in Asia, we feel that you know, there are really strong boom in terms of promoting renewable energy, but also solar, which is mainly led by solar. We'll see, you know, later on that the other renewable energy sources also are key components to develop the local countries, local population access to energy. So this is something that will be, you know, a key driver for the local governments to reach their objectives also. In terms of, I will discuss this topic really throughout, you know, financial spectrum and financial eye. I can't tell all the different measures on the financing solutions, but I took two examples for in Asia, which is quite interesting for Pakistan also and Malaysia. Those both countries are promoting renewable energy and solar PV projects throughout Islamic financing. This is something that is really not very well known from developers, but also from other, you know, IPPs. And for instance, in Pakistan, a big hydro power plant has been issued and be financed by Islamic financing. The Sharia compliant financing is also allowed in Malaysia. We can go afterwards, you know, this presentation to more details if you want. But both countries are also today promoting renewable energy by attracting and giving, you know, some innovative financing solutions that could bridge, you know, the gap between the capital requirements to implement those projects and getting affordable and viable solutions. We know also in Asia more generally that there are more and more schemes that are implemented in order to promote the solar power, but also renewable energy. I can mention a few of them, like the Asian Infrastructure Investment Bank or the New Development Bank, which the recent president, Mr. Kamat, said that 60% of the funding will be booked for renewables. So those new institutions are also not very well known from the players on the ground, and this is something that we Finogreen can bridge the gap by you know, showing those facilities. We can mention also the National Rural and Renewable Energy Program, the Electrify program also, which encouraged by the European Union, the SREP also, which recently financed $30 million US funding for Cambodia. So all those programs are have a common base is to promote renewable energy and to facilitate, you know, small mid-cap developers to finance and get in, you know, affordable solutions in the countries. And I wanted also to look at and to discuss what we call bankability, because this is a term that we can meet everywhere, but what does it really include, and especially in Southeast Asia? So bankability is a project. It's bankable when a lender is willing to finance the project, so when it responds and it answers to all the criteria from the lenders. So for that, we have to take into account different components which are really crucial: the technology side and the know-how from the developers. So how the project or the plant will operate over its lifespan, how can it be adapted and customized from a country to another. We know that, for instance, in India, a solar plant is not operating the same like in, for instance, in other neighborhood countries like Indonesia. How do we deal with the shipping and yeah, the shipping the shipping part, which is a key component. The financial parameters for bankability is really important. What do we have to look at to make the project financially viable until the completion? We know that those are really key components and criteria is really important. And besides those criteria, we think that the regional specificities are a really key component to adapt to. Likewise, a cultural component, local way of working also are something which is quite important. For instance, I took two examples how the non-recourse financing solution is seen in Asia, which is the definition might be quite different from what we've seen so far in Europe or in matured market, for instance. So bankability, as I said, is a solar PV project is considered bankable if lenders are willing to finance it, taking account different parameters. So when I said technology, it's the module producers, what is its track record before implementing a solar PV project, to take care and to lead all the due diligences regarding this part for the certification, if it's tier 1, tier 2. It seems maybe not that important at first, but we know that after going through the value chain of a solar PV plant, that there might rise some cost overrun. The project developers also, what is its track record? This is something that it's quite important, regardless, its track record, but also its attractiveness for investors and banks. We know that few of our clients and investors have these criteria on the top of their list. If the project developer has an existing operational assets and the ability also for those project developers to scale up their pipeline or the project. This is quite happening in India, for instance. We know that, and we are currently seeing that lots of individual operational assets are flooding the market because few developers couldn't scale up their asset and their portfolio by a lack of financing and equity financing solutions. Also, key parameters would be also the tax incentives throughout the local regulations, the risk and mitigants that could be took into account. So all those parameters would be taken into account from a lender's perspective, and what they are seeking is the really stable and predictable cash flows, the different coverage ratio, the non-recourse financing, if it's possible, depending on the countries. So all that parameters are all those key components for bankability. And how can we make a project bankable enough in Southeast Asia is by taking it into account. I'm putting through this slide, the previous one. Yeah, we are seeing that on all the value chain of a solar PV plant, we are going to take into account all those issues which could be environmental, in terms of development, social issues also, in terms of also the revenue. In India, for instance, we are currently seeing the issues regarding the different discoms that have a financial health which is in a bad shape, even some programs like the UDAI scheme is currently happening and restructuring their balance sheet, but those issues are really important. The country and political risks are really important as well. We are seeing that especially in Africa, but also in Southeast Asia, where some countries are more or less getting on a hit once the presidential election are happening. Recently, we know that there were some issues in Thailand with the death of the king, and those issues also have to be taken into account to make a project bankable. The currency risk is really a key component also that could rise and could lead to unhedged debt solutions, for instance, and this is something that we have to take into account upfront before implementing a project. And we on all those parameters and components that I mentioned, I'm taking few time to give a return on experience we had in a concrete project especially in solar that was in India. We helped one of our clients, an Indian developer, to refinance a US denominated loan, which was not really hedged, and the non-hedging currency was a big issue regarding the different potential investors for this project. So we converted the US denominated loan into rupees. That helped the client to mitigate the currency risk and make him and gain some economies to reinvest. We had also some issues regarding the yield factor. So they were using tier 2 panel panels, and we turn it to tier 1, and that results to an increase in yield and give more comfort to potential investors on the quality of the plant and its productivity. And also a key component, and which is going to happen especially in a mature market like in pilot countries like India, China, Thailand also, is the debt refinancing. This is something that is happening due to the attractive interest rate happening in Europe, in France, but in India we are facing not that attractive, but the sensitive decrease of the cost of debt, which is happening, and more and more projects will have to be refinanced and getting more optimized debt structuring. So that will allow the clients to reinvest and to diversify geographically by targeting other countries, and with this cash gain from the debt refinancing. Getting back to the different issues that Ben has summarized at the end, and we know that to summarize is the fact that Asia is a really promising market. I'm taking two examples, quite recent, a couple of weeks ago, from Vietnam and Indonesia. Decision number 11 and 12, both of them are going to promote renewable energy in those respective countries, which is a really good thing. But I'm putting an orange light because some issues are leaves room to some uncertainty, like the absence of mechanisms for corporate PPAs on those countries, the open access possibility to implement. In Vietnam, there's some uncertainty for after June 2019. So those issues are also, taking a hit for promoting, because for instance, in Indonesia, the feed-in tariff, which was revised recently, causes bankability issues for a number of renewable energy projects that have been already developed. So on that part, we think that have to be those questions has to be raised and to be negotiated with the different regulators and related ministry. but afterwards, and to maybe finalize on that, because we are getting quite short in terms of time, we know that Asia, it's a really strong potential to that needs to be captured and to also to promote, because of the renewable energy that could be a really strong impact in terms of local development, but also in terms of economic development. So the key driver and the key challenges will be to remain and to keep the pace for leading countries like India, China, Thailand, and those countries to keep going and helping them and then their respective governments reaching the targets in terms of renewable energy and solar power, helping the different governments also and new governments implementing renewable energy in their country based whether on those pilot projects and pilot countries. And the question that may arise from that is, should the new entrant countries follow the model of advanced countries like India? I think that that is a key question, especially with the different tenders and bids happening in India with the lowest tariffs. I'm not sure this is going to happen in those neighborhood countries in the short term. But yeah, at the end, there is a really strong and the first question and challenge is to bring the 24/7 power to local communities in remote areas, especially in Southeast Asia, by developing off-grid solutions and related financing solutions. Also, it's due to the different nature of the countries in Southeast Asia. As I mentioned earlier, small mid-cap projects will have to be developed for these small mid-cap projects, and give additional guidelines to public entity to support them in drafting key documents like PPA documents, but also for like commercial banks who are going to arise in those countries like Myanmar, etc., and to give them good coordination and to between public entities and private companies. And finally, to leverage on international standardized organizations such as Terawatt Initiative, International Solar Alliance, that all those countries are doing or have signed yet. So all those measures will be really strong and required to implement these renewable energy part in the region in Asia. So that's it. Thank you very much. And Shushan, I'll let you take back the mic.
Yes, thank you very much, Rohan, for the presentation. We have a few more minutes, and yeah, we received quite a lot of questions, but we selected some of them, so I will ask to both of you. Just let me share my screen. Yes, so the first question is both for Rohan and for Ben. It's a very interesting one, actually. If you were a developer, which country would you enter in the countries that you mentioned and covered in your research? Which country proposes the highest return for project developers? So yeah, maybe Rohan, you can answer first briefly, and then we can pass it to Ben to hear his opinion.
Yes, sure. Yeah, indeed, it's a good question. I mean, in terms of leverage and developer, it depends on what is the capital requirement and from an equity perspective. But as of now, I would say that how can you enter a market? Is it through a greenfield project? Few of our clients are entering the market by acquiring, for instance, ready-to-build projects that avoid them spending lots of time in terms of developing those assets. But to answer the question, I would say that Indonesia, even although the feed-in tariff revised happened, is a strong market today. Vietnam also will be a key component, key countries. India, of course, will be and will stay a key player.
Okay, so you would rate Indonesia first?
Yeah, Indonesia, I would say.
Okay. Thank you, Ben. Which one or two markets would you mention? What would be on the top of your list?
Yeah, I'll agree with Rohan. So, of course, as he said, it's very dependent on cost of capital and other constraints. But from a sort of high-level view, I would say either Indonesia or Malaysia are probably the most attractive markets right now. And that's for a balance of strong FIT policy and political commitment, unique island grid needs that distributed solar can be really useful in, and see sort of in Malaysia and potentially in Indonesia as well, the sort of the promise of competitive procurement as well ensures that there's a regular cadence of central procurement from PLN and in Malaysia as well.
Mm-hmm. Okay, interesting, because we were in Indonesia just a few months ago with our trade mission. A lot of challenges, but a lot of long-term opportunities. So, okay,
Absolutely.
thank you. Next question, I think it's more for Rohan. Are there large local pension funds, institutional investors that are available which could provide cheaper funding in local currencies in these markets, like in similar to South Africa? And this question is referring to the operational phase mainly.
Yeah, pension funds locally, I'm not so sure. We know that there are more and more pension funds that are going into renewables, because renewable energy is giving predictable, long-term and stable cash flows. So pension funds are not requiring a really high internet rate of return. Likewise, private equity firm. But in India there are some of them, but I'm not so sure for countries like Malaysia or Indonesia, and even more in local currency. I doubt that.
Okay, great. One more question I take, and this one is for Ben. And yeah, this is a very interesting one as well. With the tender making news in Iran, it has not been announced officially. Do you have a predictive timeline and scale for such a tender? And this is especially interesting because we are also going to organize a trade mission to Iran in a few months in September. So also very curious to hear your thoughts.
Sure. Yeah. So I don't have any too much more information than what's available in Iran, but I have spoken to a couple of people there who are expecting something by the end of this year or maybe the beginning of next year. It's a very interesting market. It has a lot of potential, and I think something that maybe will make that market more attractive is a firm or developer who's willing to set up local manufacturing, because there is a domestic premium for the FIT outside of the tender for local manufactured content.
Mm-hmm. Okay, well, thanks once again for providing all this information and sharing your thoughts with us, Benjamin and Rohan. Thanks a lot for joining the webinar today. I would like to, yes, summarize and close this webinar by showing you also the upcoming events that we are organizing. You can see the Solar Future Netherlands, Solar Asset Management Asia. And of course, don't forget to save the date of Unlocking Solar Capital Asia. Thank you very much for joining this webinar, and yes, I wish you a very good day and evening or morning. Thank you and goodbye.
Thank you.
Thank you. Bye-bye.